Good afternoon, traders and investors. Will back here with another one, coming to you with a Friday and weekly market recap. Hopefully you guys had a very good session on the Friday, and hopefully you're having a very nice long Labor Day weekend as well. And in Friday's action, guys, we had the S&P, the QQQ, and the semiconductor index pulling down hard, but you did have some decent rotation in other sectors such as financials, healthcare, and even consumer defensives. Now, most of the downside selling was concentrated into semiconductors and big tech. For this following reason, we had some news early morning from the Wall Street Journal that AliBaba was unveiling a new AI chip as China was racing to close the gap with NVIDIA. So to speak, a mini DeepSeek #2 moment. You guys must remember that DeepSeek moment back in January. Well, this is another one that kind of sent the markets, especially the tech-heavy names, into a bit of a tailspin early Friday morning, and they never really recovered, which kind of capped the week off with some losses and ended the month of August on a red note. Now, the article is as follows, guys. They unveiled a new cloud computing chip designed to handle a wider range of AI inference tasks, marking a step beyond its earlier, more specialized processors. Unlike earlier AliBaba chips fabricated by Taiwan's TSMC, the new processor is manufactured in China. It is aimed at AI inference, the process of applying trained models rather than training, which still requires top-end NVIDIA hardware. Chinese factories, constrained by older equipment and US restrictions on advanced tools, face limits on boosting the output, citing industry insiders. By the way, those same industry insiders in that Wall Street Journal article said that China was still far beyond any products that NVIDIA was currently putting out, even the H20, which this chip is supposed to be benchmarked against, talking about the AliBaba new AI chip, of course. Other Chinese firms are also filling the gap. Shanghai startup MetaX launched a chip in July positioned as an H20 substitute using older technology and combining two smaller chips to improve performance. It offers more memory, but also consumes more power. Now, China's biggest weakness remains training AI models, which depend on NVIDIA's most advanced chips, which they do not have, of course. AliBaba's new processor is focused on inference, not training. Chinese engineers say that domestic chips, including Huawei's, often struggle with training runs, overheating, and breaking down mid-process. So, although the article does say some of the drawbacks of the new AI chips from Baba, saying is the fact that they're not as advanced as the NVIDIA chips and that Chinese engineers are currently still struggling to catch up to NVIDIA chips, this news article alone was enough to drop a lot of the big tech names 1, 2, some even 3%, especially like NVIDIA themselves. So, is this a threat possibly to the AI narrative? Is it a buying opportunity? Those are the things that we'll be discussing later on in today's video. Speaking of today's video, we have a few things to cover together. Number one, we're going to be going over the index rundown that we usually do. Sorry, prior to that, we have two earnings to cover. The two earnings that I'll be bringing to you guys for today is going to be a few that we're having earnings on Thursday after the close. Talking number one about Iris Energy, IREN, and then we're going to be doing AliBaba as well. Take a look at those two companies after we're done with the earnings segment. Then we will move into the technical analysis portion of the video, where we will do a full index rundown. Keep in mind, you do have the monthly candle closes, so we'll be taking a look at not only the dailies, the weeklies, but also the monthly charts, seeing how we're shaping up into the month of September, which is notoriously a red month for the markets. If I just move my big head to the side, you'll see that September, at least since 1945, has been arguably the worst performing month. It doesn't mean that every single month it is red, but still, on average, it is one of your more turbulent months out there. So we'll be taking a look at some of the monthly candle closes and how we're shaping up into the month of September with the rotation and all of that. Thereafter, guys, we'll take a look at our big tech name list and do the exact same thing. Daily, weekly, monthly rundowns, see how some of these charts are shaping up into Q3, whether there's some buying opportunities for some swing trades or possibly even some longer duration portfolio buys. Towards the end of the video, we'll be taking a look at our biggest gainers and losers of the day. So on Friday, we had many names to the upside, of course, some after their earnings, and others, sadly, a lot of tech and semiconductor names to the downside. So are there any opportunities to be found on this list? That is what we will ascertain towards the end of the video. And to wrap it all off, I will be giving you guys a look into the portfolio and see how we did last week. Special shout out to all of our trades here. You can see that it was a pretty good week for us. Most of all, well, actually all of our wheel trades ending in the green, even some of the directional and lottery trades also ending in the green, and some of the assignments we got some very nice credits on got called away on Sentinel-1, and the other ones that we still have, we're farming some really good premiums. The Affirm trade, probably the best closure of the week. We were able to wind that one down for $22.50, a 3.4x. We entered this trade back in the month of May, and we rode it pretty much into the $100 target, which was our profit target. So been a very good week for us. We ended the day actually green with these Affirm gains, even though the market was unfortunately red. So I'll be taking you guys through these trades and also through which trades I have positioned into next week as well. So it should be a very fun video, guys. Let's jump right into it, shall we? The S&P down about 0.6, the Q's down about 1.16 on the Friday session, but you can see some good rotation across the board. Take a look here, you'll see that most of the damage, as I was saying, was concentrated mostly into big tech and semiconductors. NVIDIA, Broadcom has earnings, by the way, this week. They were both down about 3.5%. A lot of the semiconductors kind of taking a little bit of a bath to the downside here. Google up 0.5%, even though that all of these sector peers were kind of red. And in terms of financials, healthcare, they actually did really well. And consumer defensives too. Some of the bottom half of the market was a bit mixed. Industrials coming down, but real estate, utilities, and energy not performing too poorly. So once again, this was a question of when big tech has a negative news headline or chooses to rotate down, is the entire rest of the market there to pick up the slack? Well, on Friday, it indeed was. So the rotation was still pretty healthy in the markets overall. Taking a look at your one-day relative, you can see that even better to where the market was somewhat mixed. The heaviest weights, of course, were down, speaking mainly about technology. Industrials and cyclicals were down as well, utilities and communication services. To the upside, you had some of your more defensive names and some of the more value-oriented names, consumer defensives, real estate, healthcare, materials, and energy to the upside. On the one-week relative, we remain slightly mixed in the markets. It was a fairly turbulent week, all things considered. That being said, utilities, defensives, healthcare, and industrials to the downside, and technologies just kind of in the middle, ending the week flat. They were really, really nice into the Friday session, and sadly, with the red on Friday, they unfortunately ended in the red. To the upside, we have energy, communication services, materials, and financials. On your 1 month relative performance, guys, how was the month of August? Really good. And we know that traditionally, in terms of seasonality, August is never really the best month, right? As you can see from this chart, or as you can see from this chart as well, the month of August is never really known for its gains, but we did have a pretty good month over the course of this August. At least your 1 month relative performance saw most of all major sectors ending in the green. However, technology remained fairly muted all month. It seems that every time we were to get some gains, something happened which kind of sent us to the downside, whether that's the growth scare in AI 2 weeks ago, where you remember the Monday, Tuesday, Wednesday sessions were quite brutal, whether it's the slight sell down after NVIDIA earnings and other things of that nature. Some of the big tech names out there haven't really done much over the course of the month of August, but at least the whole rest of the market was there to kind of pick up the slack. Where we stand in current markets, we are still in a greedy environment. At least most retail investors do feel that way. I'll remind you, we just went over seasonality. September is quite choppy overall. You can tell that from this graph right here. The markets truly hit their next stride into the end of the year, into late Q3, early Q4. You can see this chart is the data from 1945. The worst performing month is arguably the month of September. Will this month be in line with this historical performance? Well, that's anybody's guess, right? This is the average. It doesn't mean that every single month, every single month of September is going to be red. If you take a look at the returns from 1996 to 2024, it also shows this is a more concise timeline, not since 1945, but really over the last 30 years, roughly. You can also see that August and September are some of the more awkward months for the market. But if you break it down year by year, take a look here for the month of September from 2007 all the way through last year in 2024. Well, some months in September are actually green. Some other ones are red, but you can clearly see there is a contrast between April, May, June, July, which for the most part have a lot more green. August and September and even October are a bit more choppy. The months where you have the highest probability of more green are arguably November and December. But like I said, right, September is known to be negative. It was negative 2020 through 2023, but 2024 last year was actually a green month for the month of September for the S&P 500. So we will see. Maybe it's a question of, once again, technology taking a breather and the whole rest of the market there to rotate, because the whole rest of the market definitely does have a lot of space to do that, right? If you take a look at the breadth indicators, breadth in the market was actually not that bad leading into the Friday close, because the whole rest of the market has been really playing Some good defense here, whereby the tech bulls have kind of been lacking in the last month. You can see that percentage of stocks above their 20-day moving average still sits at a cool 71, which does show a very broad and bullish environment. The percentage of stocks above their 50-day EMA, which is the institutional metric, is currently above 65%. So institutions are still buyers, maybe not in your preferred area of the market right now, but overall they are still buying. That is still in relatively bullish territory. And the best one of them all, percentage of stocks above their 200-day EMA, that is still relatively healthy at around 60%. So can we have some broad market pullbacks? Yes, absolutely. But the bulls do remain in big control here, especially in terms of market breadth. It's going to take a lot to kind of unwind that. Now, do we have any catalysts this week that could possibly unwind this breadth and lead to a negative seasonal period for the month of September? Well, yes, as a matter of fact, we actually do. We have one company that has earnings on Thursday, and if this also does not go as planned, you could expect a bit further weakness in semiconductors, and that, of course, is going to be AVGO Broadcom on the Thursday after the close. In terms of your macroeconomic headlines to look out for here, guys, well, on the Friday session, we had some okay data. The PCE numbers largely came in line. Year over year on the PCE was 2.9%, which was the estimate. Personal income and personal spending came in exactly in line with expectations. It's a good thing that personal income is largely outpacing the current rate of inflation, so consumers are slowly but surely regaining their pricing power. Michigan consumer sentiment surveys unfortunately came in a little bit weaker than expected, showed that the consumer was still uncertain about the current economic landscape. The biggest things we have to look out for this week, though, ISM manufacturing PMI, Tuesday. Then we got the JOLTS jobs openings on the Wednesday. That's going to be very big for the markets because we know that the narrative right now, as the Fed clearly told us about a week ago at this point, is that the balance of risks is shifting from inflation towards concerns over jobs. So every one of these jobs reports is probably going to hit the markets a lot more in the near-term future until we get those first volley of rate cuts, of course. The ADP private employment change is coming out on the Thursday. That'll also be a big one, as well as ISM services PMI, also a gauge of strength in the economy, of course. You don't want to see a read below 50 here. And then on Friday, you get the big one, the biggest one of them all, guys. The non-farm payrolls, what spooked the markets roughly a month ago at this point in time. Will it do it again, or will the jobs come in line with expectations or better? The expectations are for 78,000 jobs, which is, I'll remind you guys, in relation to the most recent few months, right? 78K is very low. If you just take a zoomed in view right here, you'll notice that, we've been moving down from, 200,000 jobs added per month, then down to 100,000 jobs, now down to the double digits currently, right? Of the past couple of months, June, July, and now August, you can see very, very, very soft numbers. And that is exactly what the Fed is concerned about. So please keep that in mind. Today, or rather this week, is all going to be about economic output and the resilience of the jobs market. If any one of these reports comes in an underwhelming fashion, well, then the prophecy might be fulfilled. You might actually get a red start to the month of September, which some people just say it's just seasonality, but it's curious how sometimes these macroeconomic data points line up to cause the seasonality overall and not the other way around, right? Just because it's the month of September doesn't mean the markets have to go red. But during the month of September, if you get negative macro catalysts, which the market is already concerned about, well, then you will expect it to play out in terms of that seasonality. I'll remind you, in terms of overall inflation right now, we're currently still standing on the Trueflation Index at about 2.31. So close to the Fed's target, but we can see a slight uptick here from the months of June and July, respectively. This measures 30 million different items on a daily basis. I think it's a much more accurate measure than the PCE report, or also largely the CPI report as well. If you don't believe those reports, you might believe these ones. And last but not least, in terms of the percentage of probabilities of the Fed cutting interest rates, you got about 86% chances of them cutting interest rates here into the month of September. And then following that into the month of December, you're going to probably have one more rate cut. So currently right now, the market is pricing in 2 rate cuts, one in September and then another one possibly in December. We will see if there's more, if there's less. We'll all get to hear from that from the Federal Reserve in about 2.5 weeks. September 17th is going to be that exact date. So I did a pretty long introduction for you guys just because we closed out the monthly timeframes, and we also had a bit of a negative day on the Friday. Hopefully you enjoyed the rotation recap and what to maybe expect into the early stages of the month of September. With that being said, now let's jump into some of the corporate earnings, and after that, we'll start doing some technical analysis. So company number 1 is going to be AliBaba. They came in with earnings before the open on the Friday session, and coupled with this news headline that advantages them, of course, and disadvantages NVIDIA and all the other bunch that were kind of lumped up in this article, the stock was actually up 13%, one of their best quarterly rallies that I've seen probably in about 2, 3, 4 quarters at this point in time. In terms of the numbers, not too bad. Beat on EPS by about 4%. They did, however, slightly miss on revenue by 1.51. So the report was very well received by the markets. I mean, this piece of news right here probably gave them a little bit more of a boost because their earnings, although their earnings were good, AliBaba is still currently facing a couple problems. I'll remind you the problems that this company's been having. Well, number one, it was the soft revenue, right? AliBaba had very, very soft revenue here over the course of the past 3-4 years. Since the real big booms in 2020 and 2021, their revenues have been largely flat, and they've been competing heavily with domestic players, the likes of which are JD.com and Pinduoduo and other people, because obviously in China, it's a race to the bottom in terms of price and in terms of margins, and they're just trying to attract the most market share. That's for their e-commerce division. Their cloud business has been growing very well, but you can see here, right? We're still largely flat revenues for the past 4 years, and that's why the stock has pretty much done absolutely nothing over the course of the past 4 years. So what we're gauging in terms of interest right now is the stock a buy? Is this finally the breakout period? Is the Chinese recovery possibly on the verge of a massive recovery and a massive rally for a lot of these Chinese names that have just been pretty much left behind, right? Well, let's have a look in terms of their earnings headlines. AliBaba shares jump 13% as AI drives the cloud unit acceleration. So some of these numbers are good, but once again, they have some one-time items here which are boosting their margins, which is not the best, right? Their net margins have fallen a lot because they're spending a lot more on CapEx and AI infrastructure. At least they have been in the last 3 quarters. Let's jump into it. So revenue rose 2% year over year. That's it. While the company's net income was up 78%. AliBaba attributed the increase in profit to gains in some of its equity investments and the disposal of Turkish e-commerce firm Trendyol. So as of right now, with the one-time items that AliBaba chose to recognize, the net margins currently stand at 17.4%. Without them, sadly, you'd be roughly in line with last quarter's margins. And I'll remind you, last quarter's margins were not all the best. If I move myself over once again, last quarter's margins were about 5%. If you were to remove this one-time impact, again, guys, they'd be sitting pretty low in the single-digit range. Unfortunately, AliBaba has seen a profit crunch over the course of the past 2-3 years. On average per year, if they're not recognizing any investment gains, they're about mid to high single digits, which unfortunately is just not as good as they were back in 2018, 2019, 2020, 2021, until the Chinese economy really started to slow down. Excluding the investment gains, AliBaba's net income would have actually decreased 18% year over year as it continues to invest in the cutthroat instant commerce space in China. AliBaba is carrying out a delicate balancing act between investing areas such as AI and new e-commerce models while showing that it can continue to grow in China's competitive market. So here you go. We're going to break it down into cloud and e-commerce and then give my thoughts on the matter. Cloud was up 26% year over year. Very good. That was over and above the 18% that they showed last quarter. Here's what the CEO had to say. Driven by robust AI demand, Cloud Intelligence Group experienced accelerated revenue growth, and AI-related product revenue is now a significant portion of revenue from external customers. While AliBaba has focused on open source AI, meaning its models can be used for free and built on by developers, it also sells AI services through its cloud unit, similar to a Google or a Microsoft or other companies like that. AliBaba said AI-related product revenue maintained triple-digit year-over-year growth for the 8th consecutive quarter. This is actually one of AliBaba's most profitable divisions, so nice to see it growing the fastest. AliBaba management said on Friday that the aim for the company is to keep the cloud growth rate above the market average, rather than to raise gross margins in the near term. So once again, trying to capture market share, not so much focusing on margins just yet, just going for the total market expansion. In terms of the e-commerce division here, well, it's a race to the bottom. Let me explain. AliBaba's core e-commerce business, which accounts for more than 50% of revenue, had mixed results. Revenue rose 10%. Customer management revenue, which AliBaba makes off selling marketing and other services to merchants on its platform, like Amazon does, of course, right, jumped 10%. CMR accounts for the bulk of e-commerce revenue. The adjusted earnings in the division fell 21% on the quarter. once again, a race to the bottom, eroding any margins that they have because they're competing in what they call the instant commerce space. That is the delivery of certain products in China within an hour. Yes, 1 hour only. And their main rivals, once again, are companies like Pinduoduo and JD.com. Alibaba's own quick commerce division, so instant delivery 1 hour or less, rose 12% year over year, but sacrificing margins in doing so. So it's all about gaining that market share. Still, investors appear okay with Alibaba's instant commerce investments because its cloud computing business continues to grow, while its international online shopping unit, which includes AliExpress, which you guys probably all know, saw a 19% jump in revenue in the quarter as losses narrowed. So here we go, guys. If you want to give a breakdown here of the total revenue segments from Alibaba, total revenue 10% higher, the e-commerce group 10% higher, cloud intelligence group 26% higher, big growth driver there, and Alibaba International Digital Commerce Group, AliExpress, was up 19%, another very good growth driver for the business overall. Now, if you take a look, guys, they've been investing very heavily into AI. This company, about a year and a half ago, I remember saying on the channel that Alibaba's main selling point for any investors was the sheer amount of free cash flow that it was generating on a quarterly and annual basis. The free cash flow yield at that point was like 14-15%, which was crazy. Unfortunately, now in the last 3 quarters, since they've been spending so heavily on infrastructure and on e-commerce, right, their free cash yield is down to a more normal 2.85. So that is no longer one of the best aspects of the company. You can see here that their cash flow, free cash flow last year was about 17 billion RMB. Now, in terms of this quarter, sadly, we're at a loss. They spent more money here, $2.6 billion of free cash flow to the downside, sadly, which in turn allows them to spend less money on share buybacks. A big component of an Alibaba thesis about a year ago was the amount of cash that they had for share buybacks. That has not changed. However, they did not authorize any more. You can see that, in 2024, they bought back 42 billion RMB worth of shares. However, this quarter in 2025, only 5.8 billion, which translates to only 815 million. Now, I know the currency conversions are a bit confusing, so let's look at everything in US dollars, and you guys can see the predicament, right now. In terms of the repurchase amounts right here, you can see that 2023 and 2024 were very aggressive years for share buybacks. Every quarter, look at this, 2 billion, 3 billion, 5 billion, $6 billion in share buybacks, massive. But you can see what happened here. At the turn of the year, 2025, that's when they start investing more in CapEx. And as a result, their share buybacks are getting smaller and smaller. So sadly, the days of large buybacks for Alibaba per quarter are kind of done, but they do still have 19.3 billion of shares authorized to be repurchased right now over the next 2-3 years. And that does represent about 6.8% of the stock's float. Still good, but not the same thesis that you would have had roughly a year ago at this point in time. In terms of their costs are not too bad overall here, guys. Cost of revenue, excluding stock-based compensation, went from 60% to about 55%. So decent reduction in the cost of goods sold. It's a big component for Alibaba, guys, because their e-commerce business is huge, right? Product development expenses, those are on the rise. As we said, research more into AI and more into the instant delivery portion of the business for e-commerce. Sales and marketing expenses, also a lot higher. This is a lot of AI and competing in instant commerce as well, trying to gain market share in those two things. So sales and marketing expenses rising about 9%, 8%, which is very normal, especially with the guidance that they gave. And then your G&A expenses were down from 4.9 to 2.5. So not bad. I mean, the company is controlling costs where they can, but they're also spending money in areas where they see a net benefit to them, an accretive benefit of being able to gain some market share. Now, how that looks like across their different lines of business in terms of cost efficiencies, you can see that the e-commerce group is still bringing in a lot of EBITDA, which is very good. So earnings, right? They're not losing too much on that. As a matter of fact, they're making a decent amount of money on that. Their international digital commerce group, this is important. They only lost a fraction of the money that they were losing last year. Take a look, 3 months ended June quarter 2024. Look how much money they lost last year. Look how much money they lost this year. So the international commerce is definitely a highlight for them. The cloud intelligence group remains the more profitable segment of the business, looking very good, and then still at a loss on their all other segments business. So overall, guys, not too bad a report for Alibaba, but we can clearly see there's a problem here with the e-commerce division, right? And then you can see the blue charts right here. This is on an annual basis. Their best years were 2020, 2021, 2022, with the pandemic, of course, when everybody was stuck at home and ordering products, whether here internationally or basically in China. And now you can see the e-commerce revenues, guys. They haven't been doing so well in the past 4 years. The orange bars down here are the cloud computing unit. That has been fairly good, fairly stable, and on the rise, but still, Alibaba rounding the corner, a very slow rounding in the corner, but it's nice to see them making progress. So as a result, right now, at $135, is the stock a buy with everything we've just went over? Well, at 135 bucks, you're looking at a forward price to earnings of just under 16, which is not too bad. Company's still growing revenue at about 7.2% year over year on average through 2028, and 10.5% year per year on EPS growth, which gives them a PEG ratio of 1.58 on a forward basis. Not too bad, but also not as cheap as it was when we were looking at it down here at 80 bucks, 90 bucks with all the share buybacks ahead with the juicy free cash flow metrics. Now, right now they're spending more money on investments, as you know, as a lot of the other big tech companies around the world are doing too, and the free cash flow yield at 2.85. So as of right now, is Alibaba as an attractive opportunity as it was maybe 2, 3, 4 quarters ago? Well, to be quite honest with you guys, the answer is no. I mean, several items of the thesis remain, such as the eventual recovery of the Chinese market, the thesis about them still retaining the a lion's share of e-commerce business, both abroad and also domestically, their cloud computing division, which is also one of the best in China specifically. So there are certain elements of the thesis that remain, but some other ones, other reasons whereby you might have been enticed to buy the stock, such as the speed of the buybacks and the sheer amount of free cash flow, that is kind of down. But we can see some decent upside probably for Alibaba, but maybe not as quick of a 2x as we've just seen. So Alibaba, I'll leave it up to you. Some people just don't want to invest in these Chinese companies because of the inherent geopolitical risks that are associated with them. They also have very heavy competition in China for e-commerce. As I said, it's a race to the bottom, so you may not see the acceleration of Alibaba margins maybe for the next few quarters, dare I say a year and a half, right? But this company is still not trading in an expensive fashion. So is it a buy at 135? It's a medium buy for me. It's not as good as a buy as it was possibly around the $100 range, which we were at just about a month and a half ago. But at 135, is it a bad risk to reward? No, but are there maybe better ones? Quite possibly. If you look at Baidu, Baidu is still absolutely destroyed down here, and JD.com as well is still possibly destroyed. So Baba, solid company, but may not be the best bet in China. If you want to know how I'm playing this one, I'm just not picking and choosing, guys. I'm going with the entire China ETF. I'm going with KWeb. The biggest holding in KWeb is Tencent, followed by Alibaba, and then you have, of course, all the other players such as Pinduoduo, JD.com, and Baidu. So if you are struggling to find your own name to choose amongst all of these Chinese players, well, maybe you just go with the ETF and you go for the broadening out of the Chinese economy as a whole, and that could be your thesis. At least that is what I'm doing personally. That's everything I had for you guys for the Alibaba earnings. Hopefully you enjoyed. Now, let's dive into a company that a lot of people wanted me to do, which is going to be Iris Energy, ticker symbol IREN. Good old IREN. A lot of people comparing this one to CoreWeave, a lot of people comparing this one to NBIS, and several other players in the space, because we know there's a lot of different companies that are doing this, basically building data centers and renting out the power. They all have their own little specifics as to how they're doing that. Some are raising debt, some are diluting shareholders. Special shout out to CleanSpark, special shout out to Mara as well. They've just diluted shareholders into the ground, but people seem to love IREN because it has the lowest cost in terms of the energy consumption that it utilizes. It also has a Bitcoin mining portion of the business, which they've used the proceeds selling Bitcoin to kind of raise the capital required to build these data centers. And now they're kind of pausing the BTC mining expansion in favor of going for the AI portion of expansion, whereby they will be renting out the compute capacity. So in terms of their earnings on the Friday session, they were actually very strong. IREN coming in with a huge beat on EPS. Nobody was expecting that. The expectation was 17 cents a share. We got 65 cents a share. Very strong beat, but we had a slight little miss on revenue by about 0.85%. But one piece of news that did come with the news on Friday is the fact that they became one of the NVIDIA preferred partners, meaning that whenever NVIDIA has some allocations for the Blackwell units, IREN will be involved, of course, as well. If you're not on that preferred partner list, well, you just might not get the next shipment of Blackwells or Blackwell Ultra chips that are coming out in Q3, Q4, and investors really like this. This is going to allow them to scale their current Blackwell chip offerings for about 2,000 chips that they have right now to about 11,000. The exact number is about 10,900, but overall, they had very solid earnings. Let's jump into it real quick, and we'll explain whether or not this company is a good investment. Obviously, a lot of people on the channel that watch me have shares from down there, and they want to know, can it run further? How much more can it run further? And people who don't have shares, who have seen this company just trend on Twitter, Reddit, YouTube, because everybody's talking about it, is it still a good buy here? Well, we're just going to go through this logically and objectively and derive whether or not that's the case. So first things first, when we're comparing a business like this, because there are obviously other players in this same niche, we got to compare them against a few different metrics, right? And a few of the concerns that people might have. Number one is going to be their cost of electricity, because of course, this is something that requires a lot of electricity. Now, if you take a look at CoreWeave right here, depending on where their installations are, we know that CoreWeave has installations pretty much all across the world at this point. But if we were to derive some sort of an average in terms of price per kilowatt hour of power, you can see that whether it's in Texas, that's about 8 cents to 15 cents. If it's in North Dakota, it's between 0.3 to 0.07, right? So 3 cents to about 7 cents. And the European power requirements are a bit higher. We can see that from Nebius's cost per kilowatt hour right here, 6 cents to 17 cents. CoreWeave has some data centers in Europe as well. So possibly their average right here might be sitting anywhere between, let's call it 7 to 10 cents. I'm just really getting a broad thing because you'd have to take every single one of their data centers with their geopolitical or their geographic averages rather. And it's a bit of a complex study. But if we were just to take a normalized average, call it between 8 to 12 cents perhaps for CoreWeave, right? Nebius sits at between 6 and 17 cents. IREN sits at 0.3 to 0.05, so 3 to 5 cents kilowatt hour in Canada because they are using a lot of renewable energy sources in British Columbia, which is very good, right? And also the others, such as the hyperscalers like AWS or Microsoft Azure, they secure rates of between 5 to 10 cents per kilowatt hour because they have a lot of scale, something that Nebius doesn't necessarily have. Iris doesn't have just yet, although they do generate a good portion of their own power, which is a benefit, but you can clearly see IREN has the lowest cost per kilowatt hour. So point number one to this company, if you're looking to compare them amongst each other. Now, another factor that you have to look at is how are they raising the capital in order to build out these data centers? Well, CoreWeave is raising a ton of debt. Right now, their current liability stand at about $6 billion. That will be expanding to about $20 billion in debt. And that's one thing that leaves a bit of a sour taste in people's mouths when they're looking at CoreWeave for a possible investment. Nebius Group doesn't have as much debt as CoreWeave does, but still raises capital through the debt markets, of course, doesn't have that much, but Iris Energy right now, they have the least amount of debt. If you take a look at their balance sheet, well, I mean, we can look at it this way or in the earnings slides, but I'll just show it to you at a first glance, right? If you take a look at their balance sheet right here, you'll see that the company has no debt whatsoever. They are burning a lot of free cash flow to expand their installations. They're selling a lot of Bitcoin to fund that as well. But one thing that you have to keep an eye on, guys, is if they're not raising capital through the debt market, where are they raising capital? We know that IREN raises capital through its Bitcoin sales that it mines, but also it has done a decent amount of dilution over the course of the past 6 months. You can see their share count real quick has increased from about 0.112 billion, so, 110 million shares, all the way up to double that in the most recent 6 months. So they have not diluted that much over the course of the past 3 months. But if ever they get more orders and they have to raise more capital more quickly, you can expect a bit of share dilution on the horizon. I'll remind you, this one thing is something that can sometimes ruin companies. That's what ruined CleanSpark. It did ruin Mara as well. And when you have too much dilution, even though the rest of the industry can go leaps and bounds higher, look at Mara. It's been doing absolutely nothing. They diluted way too much. Take a look at CleanSpark, same thing. They just diluted shareholders way too much. I'm not saying that Iris Energy is going to have the same problem. I'm just telling you guys, when you're looking at a company, you have to look at the pros and the cons and the things to look out for when you're looking for points for your thesis for an investment, right? So that being said, in terms of the headlines for the earnings presentations, they were very good. Revenue is very solid, $501 million. I'll give you guys the breakdown as to which amount is from what. So in terms of their guidance as well, I'll give you guys those metrics real quick. EBITDA numbers, very strong. You'll see some triple or quadruple digits. That's just because IREN is coming off of a very low amount from last year. So of course, the year-over-year comparisons are going to be huge. Net income, positive net income. That's a very good thing. CoreWeave doesn't have that, and Nebius, NBIS just started to have positive net income as well. So nice to see that there. Those are not too bad in terms of the profit margins for the company. As of right now, you're currently standing at 17% net margins, which is very strong. One of the stronger ones in its niche currently, right? You'll see here that they have a ton of contracted megawatts. So in terms of grid connections, a lot of data centers that they're currently building, and in terms of their mining capacity for Bitcoin, in terms of how much they're doing, this is what they're going to cap it off, guys. So in the most recent earnings call, they said that they're going to pause the expansion of mining facilities in favor for the AI revenue. So in terms of the forward guidance presented by the company, it's down below, but we'll revisit this again. Next year, you're supposed to be getting about $1.25 billion in revenue. About $1 billion of that, I wrote it down right here, about $1 billion of that is still going to be from their Bitcoin mining operations. Of course, depending on the price of Bitcoin. And they did include a slide. 250 million of that is going to come from renting out their data centers. So they're not scaling back, but they're pausing the expansion of one line of business in favor of expanding into the second line of business overall. Let's take a look at a few more slides, as we'll see right here. They are getting, oops, my bad, not the right one. So they're going to get 19,000 NVIDIA's GB300s at their new Horizon plant, which is very strong. As I said, right now, they're possibly looking at acquiring about 10,900 new ones. Not too bad. Here you'll see some details surrounding their new plants and power. We're not going to go through each one. You guys can do that on your own. We're just going to highlight the financial results, right? So their total revenue going up substantially. As I said, a lot of that is from their Bitcoin sales. Pivot from negative to positive net income, which is also what you want to see as a shareholder. In terms of their margin profiles, very, very, very solid here, guys, against the competition, right? So because the cost of energy for them is so low, it allows them to make a lot more profit on the Bitcoin mining portion of the business and possibly on the AI data center portion of the business as well. You can see here that the all-in hash cost is $19 versus the industry competitors at $51. And as a result, per Bitcoin mined, what is their cost? Even though Bitcoin is having increasing difficulties every 4 years, of course, more expensive for the miners to mine Bitcoin, 36K is their break-even cost to mine one Bitcoin, whereas right, the average other player is currently standing at about 99K, all things considered, with their expense profile. Of course, they do break that down a little bit lower. You can see their GPU composition. They'll be expanding wildly in terms of monthly annualized revenue. You can see here that by the end of the year, this is their planned guidance between 200 to 250 million, which is a very solid increase now that they're able to really scale the amount of GPUs that NVIDIA is giving them as well. Moving on further here, guys, you can see they give a further breakdown of the number of units that are either air-cooled or liquid-cooled, which ones are for ASICs for Bitcoin mining, which ones are for GPUs for the 10,900 GPU expansion, right? So not too bad overall. Capacity for over 20,000 Blackwell GPUs currently at their facilities, which is looking not too bad. Here you can see a couple pictures of their plants. We're not going to go through those. In terms of their new construction facilities, right? Very solid, guys. I mean, there's nothing bad to say about this company overall. You can look at their data center capacity. This is the capacity that's going to come online. So this is important for two reasons. Number one, because we can estimate if they're pausing their Bitcoin expansion, right? And depending on what the price of Bitcoin is going to be, but then they're ramping their AI, we can kind of derive what their potential revenue is going to be in either 1, 2, or possibly even 3 years. Here you can see they give us guidance all the way through the second half of 2027. So you only get about 2 years of forward guidance. And that is with the ramping, of course, of their new plants. You can see that the dark shaded areas are plants and what they have currently for operational capacity. And then, of course, the light shaded areas, depending on the color, is the operational capacity that will be coming online. So you can see here that they're going to 3x their operating capacity within the context of the next 3 years, which is very interesting. You can also see here that they have different projections for how much money they stand to make in the future here at their current at their current mining rate, essentially, right? So you can see that at 115K, which is where we currently stand roughly. The mining revenue per year is not too bad. It's over $1 billion in revenue. The EBITDA is, of course, less because you have your electricity costs, overhead, and renewable energy certificates. And if Bitcoin rises even more, well, obviously their profitability jumps as well. But as I said, out of the 1.25 total billion annualized that they stand to go for here by the end of next year, that is $1 billion in Bitcoin mining revenue and $250 million in AI cloud. That is for the end of this year, potentially. So not too bad, guys. Overall, not too bad earnings from IREN. If you guys want to know some projections, because the projections are a bit tough, right? It all depends on whether or not their construction timelines are accurate. It depends on what the price of Bitcoin is going to be, because as I said, if the price of Bitcoin drops or whatnot, then if they are not able to raise enough capital to outlay for their ongoing construction costs, well, then they may have to access either the public markets through the raise of possible dilution in terms of issuing more shares, or the private capital markets, talking about debt financing, similar to what CoreWeave does. So the expansion of the revenue thesis, if they have $1.25 billion in revenue run rate for the end of this year into next year as well, well, that gives you not too bad in terms of valuation, guys. They're currently standing at $26 where they are right now, roughly 20 forward price to earnings, which is really not that bad, and a forward price to sales of 5.1. 5.1 is not too bad for a fast-growing tech company. So if we were to take this and then extrapolate, you remember I showed you this slide right here? I did some back-end calculations. If we were to extrapolate for 3 times the amount of compute power, if everything stays the same, the cost of energy and Bitcoin follows a linear path of expansion, well then, and in 2027, you might be standing at about $1.7, $1.8 billion in revenue. And since we're not exactly sure about the true cost profile and how much they'll be able to expand margins in the future, depending on the cost of energy, right? Depending on a few different things in terms of that, well, we can just use a very natural price to sales. So if I had to extrapolate for a price to sales target by mid 2027 using $1.8 billion as a revenue proxy, and I were to build a kind of base case scenario, talking about maybe just remaining at 5 price to sales, which is what the market is giving them right now, because they do, of course, have competition. You're not too sure if they're going to dilute shareholders with capital raises. You're not too sure how much free cash flow they'll have to burn before accessing the public or private markets. There's a lot of ifs, guys. You know what I mean? So if we just take a natural 5 price to sales and you're looking at a $1.8 billion revenue run rate by 2027, 1.8 billion times 5 price to sales will put you at about a $9 billion market cap by 2027. Market cap currently is about 6.38 billion. So just that 6.38, you'd be looking at a 41% upside for the stock, which would probably put it in the, mid $30 range overall, or possibly like $40, right? 1.41 times the current share price of 26.48. You're looking at about 37 bucks. Now, some of you might think that the 5 price to sales is too cheap. Maybe you might think that they should be valued more at a 8 price to sales. So we can do it with that too. That would be your bull case for the multiple expansion of the company, right? So 8 times your 1.8, which is going to be the sales figure for 2027, you're looking at $14.4 billion market cap. So that divided by your current market cap is roughly a 125% increase. Overall. So if you're looking at this in terms of market cap expansion, right? This times your market cap expansion, right? Overall, you'd be looking, I said, 4.48 billion. And from here, you would be looking at a share price expansion of somewhere all the way up to, oops, that's not the right number. So 2.25 times 26.48, not 36. You'd be looking at an expansion of share price into the high 50s. So is IREN still possibly a little bit undervalued in terms of its forward revenue profile? Yes, but there's a lot of contingents on that, right? What's the price of Bitcoin going to be at that time? Nobody knows. You would expect it to be incrementally higher, or maybe even significantly higher than today if the price of Bitcoin remains accurate. Of course, if there's a big recession or there's a big risk off movement in the markets at that point in time, well, then it's very tough to predict the numbers of Bitcoin for their mining sales, right? Obviously, this does not encompass for dilution either, and it does not encompass for the risks of competition. Now, if we just take in line with what NVIDIA said recently, is that there's just not enough compute power across the world. So you could anticipate that IREN services are going to be completely utilized because people just cannot build these data centers fast enough. People just cannot get access to enough NVIDIA and or AMD chips to serve the demand that's in the sector right now. So it is a fairly bullish leaning thesis for this stock. There's a lot of upside, whether you use a bull or even base case scenario in terms of share price appreciation. You are, of course, later than everybody who bought back here, but I wouldn't say you're categorically late. But just keep in mind, guys, these companies, they're going to probably be commodities in the end, right? Because there's going to be so many of them and eventually the money will probably flow to either the first movers in the space or the largest players in the space. It'll probably be an environment where the winners will take the most of the market share, and then the smaller players might just get left behind as they won't be able to ever scale into productivity. Now, IREN doesn't have that problem right now because they can always fund their operations with their Bitcoin sales. Overall, not a bad bet. If I were looking to get into this one at this point in time, it would have to be with the DCA method, right? Buy a little bit here and then DCA if ever you get a weak month of September down into the $20 average. Well, you guys know the price targets, right? Mid 30s to possibly high 50s for 2027. So of course, any discounts that you might have could be a decent value proposition for you. So that's a deep dive into IREN. I spent a lot of time on this one with you guys because there's a lot of interest into this name, of course. That being said, that's everything I had for you guys for both of those corporate revenues and corporate earnings, AliBaba and Iris Energy. Hopefully you guys enjoyed. Now, let's dive into some charts, shall we? So starting off with the SPY as usual, guys, we're not going to spend too much time on these indexes because not really anything has changed, even with Friday's decline. Line in the sand level still remains this little guy right here, the lows of 2 Wednesdays and Thursdays ago. That being said, the bulls still do control the nice daily uptrend right now. Not too bad, but just keep an eye on this one. If all the macro data this week is bad, you guys probably understand what's going to happen. We're going to start off the month of September weak. You can drive into a daily downtrend right here. And at that point, you just be looking for healthy weekly consolidation. The weekly higher lows are set at about 620. Not too bad, guys. The bulls are working with a ton of space coming into the month of September. So even if the month of September is a red one, you got a lot of support, whether it's on the weekly or monthly timeframes. A backtest of previous all-time highs would not look so awkward on this longer dated chart. That would be all the way down to 613 to 598. So get your buying power ready. The way to trade and invest in these markets is always the same, guys. Don't try to predict the markets, right? All you have to do if you're trading right now, possibly not the best environment for some short-term trades because the market is very choppy, right? So day trading, yeah, but holding positions for like 2-3 weeks and crossing your fingers in an uncertain environment prior to rate cuts is a little bit dubious right now. I'm a big fan of either very long dated bets with the market on some of your favorite names or right, just possibly selling puts on any big red declines. Those are the two strategies that I'm favoring right now. Leap call options on some names or sectors that have been left behind with some thematic tailwinds into rate cuts. And then also just short puts on some of the tech names that could be coming down quickly. Moving on to QQQs. The QQQs largely paint the exact same picture right now. If you look at the daily time frame, this is a little bit of a head and shoulders. You got to see it. Head and shoulders patterns usually 80% probability of completion. So not 100%, but just something to keep an eye out on, right? If you flush this low right here, 559, daily downtrend by the bears will be underway, and you will be getting a bit of that weekly consolidation phase in the markets. If you do get that weekly consolidation phase, at the same time, it will line up with possible monthly consolidation. This wouldn't look so awkward if we have a red September and early October. Not too bad. Got a lot of support back here at prior all-time highs. Talking about 536 down to about 511. A little bit of a breakout, retest. They retest this all the time, guys. There's always some retest to be had, no matter what the catalyst is, right? You can find retests of the 12. If you go back, 15, 20 years, you'll always find retests of the 12 for XYZ reason at the time, right? Something like this wouldn't look so awkward, so be prepared for it either way. We're not trying to predict, we're just trying to be ready in either case scenario. So have your buying power ready, right? And just don't go all in on short-term weekly call options. That's my advice, non-financial advice, by the way. Moving on to the XLF financials right now. Financials really shining after the Friday session. So we might have a likely backtest area if we do come back a bit lower to start off the week. And that would be probably the backtest of the prior all-time highs, talking about roughly 53.30. That being said, daily bulls are in full control right now. Your higher lows are all the way down here, 52.33. The weekly timeframes are looking very good for continuation of the expansion profile. In the event that technology is weak, financials definitely have it in them to possibly continue. And even if they don't, you would just be looking for a backtest of prior, all-time high resistance, right? Which would be 52 down to about 50.38. Some of the banks are looking really strong. JP Morgan, bull flag into possible expansion, not looking bad. Goldman Sachs, bull flag into possible expansion, not looking too bad. And so many others. Bank of America, strong move. Wells Fargo, pushing into the previous highs as well. Morgan Stanley, not too bad. Beautiful, beautiful bull flag right here, and now expansion. And even some of the credit card names are not looking bad, right? MasterCard, expansion, Visa coming back a little bit. Some of the insurance players like Berkshire looking very good for this rapid expansion too. So financials possibly with a bit more left in the tank if technology proves to be a little bit weak. Moving on to healthcare right now. Healthcare, not too bad of a day on Friday as well. We were taking a look at this, guys. Very nice downtrend into engulfing move. Now the bulls were just looking for some sort of a higher low, right? This was very evident on the weekly timeframes as well. Tremendous engulfing move on the weekly, looking to backtest this area that was challenging for the bulls in the past 2-3 months. So looking for the new higher low for possible further trend continuation. You're very close to the 200 weekly EMA, which is also the 50 monthly EMA. And I brought this up every single video for the past 2-3 months at this point. Is it a good proposition to buy healthcare when it's down towards its 50-month EMA? Well, as a matter of fact, yes. It's only done it 3 times in the past, 15 years? Not too bad. Healthcare still remains somewhat undervalued. So if you don't want to pick individual healthcare names, you might just want to go with the entire sector. At least that's what I did. Moving on to semiconductors right now. Semiconductors, of course, a week after the Friday AliBaba news, and NVIDIA and Broadcom and many others coming down 2-3% on the day. The line in the sand is still set at about 280.65. If you lose this, you lose the daily uptrend and you lose this area of support possibly coming up as well. That's your prior all-time highs. You can see here that since the month of July, guys, have we really done anything in the past month? No, there's been some shoots to the downside. There's been some shoots to the upside here, but largely muted. Obviously not a trending market like we had prior, not only on SMH, but you can also see it on the SOX, SOXX, same thing, right? Not a very clear trend as it once was. So that being said, we are still looking for pullbacks into support on both of these names. If the SOX and the SMH pull back, there's beautiful support here. You can see it more clearly on the monthly timeframes, right? Monthly not looking bad. Any, retest of this area of support on SOX, 235 down to 213, probably definitely a buying opportunity in my opinion. And even on something like the SMH, which is NVIDIA and Broadcom heavy, if those two names take a bit more of a pullback than the rest of the sector, beautiful, beautiful retest areas, guys, for a monthly higher low into possible continuation. So in the event that we get more semiconductor weakness, I've been waiting for this. This is going to be the area to reload some longs into September and early October. So hopefully, if we get some big red days and the media starts with their good old narratives of the jobs market, inflation, and everything under the sun, you guys know darn well what we got in terms of guidance from all the semiconductor companies this quarter. The guidance was extremely strong. They do not have the supply to keep up with all the demand. So as a result, even though that industry is cyclical, we know that guidance for the end of the year and into 2026 is very, very good. As a result, the pullbacks would be for fundamental buying opportunities for the whole sector. Please keep that in mind. Moving on to the Russell right now. The Russell not looking too bad at all. Continuation of the daily uptrend right now by the bulls. Any move lower, looking for a back test. Anything above 223, higher low into the back test of support. Support stays put right here at 232, 226. Resistance, resistance, and all of 2021 resistance as well. Wouldn't look so awkward. The weekly bulls are in full control of this chart right now. Simply looking for a bit of a back test. A lot of space on the weekly to work with. Could be an interesting little trade opportunity there. On the monthly, look at this monthly candle, guys. Very strong. The Russell has done nothing in 4 years. So this might be the catch-up trade, but it is a thematic trade with macro tailwinds. Of course, if you go into a recession, nothing good is going to happen with this one. But if they thread the needle and we don't go into a recession, the jobs market stays relatively tight, inflation doesn't have a runaway period of time. And of course, if, there's not massive layoffs and stuff like that, growth with the macro tailwind of rate cuts into 2026, not too bad as a thematic trade for the next 3, 6, 9, 12 plus months, as the Russell has a lot of catching up to do with the rest of the market. So those are major market components. Hopefully you guys enjoyed that. The VIX still doing absolutely nothing. It was up 6.3% on the Friday session, but we do have a lot of volatility catalysts this week. The biggest one, of course, being on Friday with your non-farm payrolls. But pay attention before that. We get a couple minor ones: manufacturing PMI, the JOLTS jobs openings, your private employment payrolls from ADP, and then your ISM services as well. So every day this week, there is one piece of data that could send the VIX a little bit higher, and as a result, send some of your growth segments of the market, tech and otherwise, down. As a result, if the VIX goes up, you guys know what's going to happen. Look for the short puts under the market into big weekly areas of support, and you'll probably find some fantastic deals. Moving on to the yields right now. Yields still doing absolutely nothing. We need a break on the 10-year yield of 4.2. That would get a nice weekly downtrend in motion and really start down on a monthly downtrending cycle as well as we move into the September rate cut. Possible rate cut meeting by the Fed. The area to look out for on the 20-year yields still remains about 4.75. You can see the bulls have really struggled, or rather the bears have struggled. The bond bulls, right, the yield bears have really struggled bringing this one down. So no movement there on the 20-year bonds. TLT, also still an accumulation period for this market. In my opinion, it will not move until it gets the confirmation on September 17th of what the Fed actually wants to do. Moving into gold right now, gold actually with the breakout looking very solid there. Strong close on the daily, strong close on the weekly, and strong close on the monthly time frame as well after doing nothing for the better part of the last 2-3 months. We were noticing the clearest time frame here was the weekly, holding the weekly 12 EMA. Not too bad. This was a nice bull flag, tightening range of accumulation, and we were waiting for the break one of either direction, right? Downside for a short or upside for a possible confirmation long. That being said, if we pull back into support right now, 34.23 down to 33.69, you were looking for a possible entry for a possible long and basically just going for the expansion trade using the higher time frames as your guides. Nice weekly uptrend right now. Monthly looking quite strong, closing at the top, looking for the expansion. If September is a red month for equities, you might expect gold to get a little bit of a lift on that, and your next profit target would be psychological numbers 35, 35.50, and 3600 thereafter. So not too bad on gold right now. Moving on to some of the cryptocurrencies, Bitcoin and Ethereum. So Bitcoin remains a little bit weak. Friday, big red day on Bitcoin, almost 4% down. And since then, Saturday and Sunday, not doing too much at all. The bears remain in short-term control of this daily downtrend. Any move higher, looking for a lower high into lower low until they give us somewhat of an engulfing move and reverse this. We are still in weekly downtrending territory right now. So definitely weekly downtrend into prior all-time high resistance, which is currently support, 107 down to about 100 flat. And on the monthly chart, that just looks like very healthy monthly consolidation. It's been a nice a nice few years right now of expansion for Bitcoin. And until they lose the monthly time frame, I don't think that's going to stop. The likely area of consolidation is probably back into some of the resistance highs. So what I'm doing right now, I'm accumulating Bitcoin slowly as we move into these levels, and I am selling some short puts well under the market. And if they assign me into this gorgeous area of support, I would not mind taking ownership of more Bitcoin down there. But I am also nibbling a little bit for the long term on this one. Ethereum, not too bad either. Daily, I mean, still just consolidation, right? Very sideways action in terms of consolidation. The bulls are trying to protect 4,300. So far, so good. But if the markets are red this week, and you will not expect Ethereum to just go against the markets and keep rallying. If anything, the clearer pattern here on the weekly might just be a back test with further market weakness. If you get the back test, we're coming down here, 4,000 down to 3,700. That would be the reload area for me. And on the monthly time frame, this would just look a very casual, back test on the monthly time frame. Back test this area. Very challenging area the bulls had to get through. They tried it several times here, guys, since 2024. They never did it. Now they got it, so you're probably going to have some bullish support if you pull back into there. That will be my next logical reload section, as right now the price action of Ethereum is just very unpredictable. I would love to say, yeah, we're going for continuation next week, but it all depends on the macro catalysts over the course of this month, right? We know that crypto recently doesn't really move on its own. If the SPY and QQQ and the overall markets are healthy, it'll move. But if the macro starts to degrade and there's a risk-off sentiment, well, people are going to start selling off Bitcoin and Ethereum as a byproduct. So I'd be a bigger fan of being a bit patient and maybe waiting for the backtest, or maybe just embarking on a DCA process in the event that your price target on Ethereum is very high over the next 6-12 months type of thing, 6, 7, 8,000. You would just be naturally DCAing right now. That's everything for your overall market rundown. Now let's dive into some big tech names. So moving into Apple right now, Apple down about 0.18 on the day. Not too bad though. The bulls still looking quite sharp, right? So the higher lows are down here, 224 for your daily bulls. Looking for the continuation of expansion. If they just choose to tighten up right here, wouldn't be too much of a problem. Your higher time frames do look very bullish, right? That being said, weekly uptrend is clear as day right now. Looking for a higher low. You got all these guys, right? This massive chop zone. It was support and resistance for a long time, support and then resistance for several months in a row earlier this year. You'd just be looking for a natural weekly higher low. Possible expansion. The way that I want to play Apple is on any pullbacks down here to the lower 220s, I'll probably be buying a little bit. In terms of the monthly candle close was fantastic. So any early month weakness in September, I do believe will be a nice buying opportunity for Apple. Right, just a little bit of a backtest of support and possible further rally into the end of the year. Monthly MACD looks very strong after being stuck here since March, right? We're now finally starting to curl around the bend real quick. And I'll remind you, year-to-date performance on Apple is still trailing. So you could see a bit of rotation back into the name, down about 7.3%. I am holding on to my leap calls that I have on Apple. But if we come down lower 220s or under, I will be selling some puts and maybe just acquiring a little bit of swing trade positions. On to AMD second. So AMD ending the week on a red note. Of course, the line in the sand remains the lows of the Wednesday session 2 Wednesdays ago, right? If you get a breakdown lower, sadly, new daily downtrend and unfortunately just a weekly unwind right here. The bulls have great control of this weekly time frame, right? At this point, you're probably just looking for further weekly consolidation on any weakness. In terms of the monthly, how this looks like, not the best monthly candle close for AMD whatsoever, but it was such a massive move from the lows, guys, right? You're talking about a move on AMD over the past 4 months, 142%. If they consolidate a little bit into the month of September, this does not undo the long-term thesis for the company. You're just looking for a monthly higher low. So if I had any shopping to do on AMD, I'd probably be targeting the lower end of support down here, 150 down to about 130. This little pocket with the monthly 12, looking for the good old monthly higher lows for further expansion of the long-term thesis. I'll remind you of the long-term thesis for AMD. The revenue and EPS profile is looking amazing for the next 3 years. Look at this expansion of EPS into 2027. Look at the expansion of revenue into 2027 as well, doubling on both those fronts. So looking quite good. Long-term thesis is well intact. As a result, any short-term dips, in my opinion, will result in nice buying opportunities. Into Amazon right now. So Amazon, not the worst day on Friday, but still a red day nevertheless. The bulls are trying to hold on to this daily uptrend. We'll see if they can do it, or if they just tighten up right here. That would not be so awkward because we are doing so above support, 227 down to 218. So maybe throughout the month of September, maybe you see a bit of Amazon weakness just tightening up over here. In terms of the monthly timeframes, the monthly timeframes are not too bad, right? Bit of an inside candle, very awkward candle because we opened up, or rather we, had a bit of an earnings slide. They got it back since, but this whole month, since the beginning, the end of the month of July, right? The August candle opened all the way down here. So that's why this monthly candle looks so awkward. In the event you get a little bit more consolidation, once again, you're looking for a monthly higher low. So I truly believe as well, if the month of September is one of consolidation for the markets because of seasonality or macro or whatever, you will find me acquiring more Amazon shares down here under 220, call it 215 down to about 205, this little pocket with the monthly 12 EMA. I think it's going to be a nice area to pick up some Amazon shares once again, or possibly go for further swing trade longs. The valuation down there is still pretty good for Amazon, looking not too bad. Moving on to Google right now. Google, one of the strongest names in the market recently. Even on Friday when everybody was down, Google was not. So clear daily uptrend expansion right now, clear break of the all-time high resistance range, which will now be a support range. I'll gladly change this to a nice green box. And at this point, the higher lows are set 206.32. In the event that you unwind this with the rest of the market and pull back, well, the bulls have a tremendous amount of space, guys. Anything above 164. Look how much space they have for a new higher low. So in the event you come crashing down below this area, I wouldn't be counting on this area too much if the overall markets pull back. In the event that Google pulls back because of the Department of Justice news headline or macro headlines or a combination of both, the likely area that I will be looking to play Google more would be 195 down to 185. Pullback there from the top, there'll be a pullback of 8, 9, 10%. Usually it's been a good opportunity to buy Google when it falls that much after a new high. On the monthly timeframes, very, very strong monthly candle. Look at the MACD on the monthly, guys. Very nice cross. Even if we give back a little bit on the monthly time frame in the month of September and go for a back test September and October, I would be a big fan of buying these pullbacks on Google for possible expansion into Q4 and into 2026 as well. in around 190, which is where I want to buy it. That would be a forward price to earnings of under 20 again, a 1.32 peg, which are also very strong valuations. Google, though, not looking bad at all up here. On to Meta. Meta sadly ending the week a bit red here, 1.65 again to the downside. Just not able to shake the unfavorable AI news of Mark Zuckerberg, pulling back on his hiring spree, et cetera, renewed CapEx obligations as well. So sadly, we're really toying with the line in the sand level right now. 734 break below. Sadly, it's a new daily downtrend. You're going for the earnings gap fill, and it would just be more weekly consolidation. The weekly candle closing at the lows. So if you get more follow through, you would not be surprised. The better support range stays put at the prior to earnings level, which would be roughly 710 down to about 680, this zone right here. A little bit of a pocket on the monthly chart. Would that look so awkward for Meta to pull back down? After 3-4 months of beautiful expansion, the nasty monthly candle in August for some follow through in early September, that wouldn't look too awkward. So this is buy level number 1 for me. As I said, 710 down to 680. And buy level number 2, the better one, would be the 12 EMA. Whenever Meta comes down close to this 12 monthly, fantastic buying opportunity. So you have about a 10-15% range here that you can play within to accumulate some shares. At 760, where they were just a few days ago, the valuation was not bad. If you pull back down a bit more to 710, you would currently be trading at about a 27, 26 forward price to earnings. Decent. You will find me acquiring more shares of Meta in these two locations respectively, and just kind of, take it one day at a time throughout the September period. Moving on to Microsoft right now. So Microsoft down about 0.58. We will see. Can the bulls get this back? Daily downtrend. They engulf this move. Nice engulfing move. Can they set the higher low and go for the trend change? Or will the bears just be too strong again, send us for more daily downside and more weekly downside as well? As of right now, since there is no daily trend change, we cannot say the weekly lows are set in stone. You could see a bit more slide because there's no support here. There's just really no support here at all. So Microsoft is really beholden to the direction of the overall markets. If the overall markets are weak, Microsoft will probably pull back a little bit more too. If you take a look at the monthly timeframes right here, not the best candle close in the month of August. If you do pull back a little bit lower, the best area for me to be playing Microsoft would be, I know, 460 down to 422. You might think that that's way too low. Maybe you're right? That would be a pullback from the highs of 15, 18%. Crazy pullback from the highs, I know, but look how much space the bulls have ran with right now. They don't often get this far extended from the 12 EMA, guys, right? It just doesn't happen that frequently. So if we come back down to maybe the high 400s, 480, 470, maybe we can start writing some short puts, 460 and under. I don't know. And maybe we can also plan to possibly buy some shares if that is the case, because as of right now at 500, the valuation is a bit too high for me. So Microsoft is a hold for me. When it ranges or comes into a nice support area, I always play Microsoft, always. It's one of my favorite companies in the market, but I have not played it in a while because I just am not a fan of these valuations up here. And I'm also not a fan of the price action. They did not set any support on the way up. So it's very tough to plan for some swing trades until the bulls get the small term timeframes back. Moving on to Netflix right now. Netflix down about 1.88%. They're still desperately trying to hold on to the support range, guys. 1210 down to about 1185. If you flush this range and flush support, daily downtrend is once again started, and you will have set a weekly lower high and possibly going into the lower bound of support down here, 1160 down to about 1100. This is the second line of defense. As of right now, the fib retracement size on this move right here, if we do break down, it's about 50%. So it gives the bulls a 50% chance of resetting the trend, gives the bears a 50% chance of revisiting the lows or smashing. In the event that you get option number 2 with weak September seasonality, well, look at the month of July. Candle close for July and the month of August, not that inspiring. We are not that far off from the 12 EMA. One more slide could undo a lot of the bullish price action that we had, but could be a fantastic revisit of a long-term moving average that whenever we do touch it, it has represented a nice buying opportunity for Netflix when we've been in a bull market. So just pay attention to that, right? My next big share purchases on Netflix would have to be under $1,100, closer to this 12 EMA. That's the level that I'm going to be trying to look for in the next month or so. On to NVIDIA right now. NVIDIA down about 3.32%. Sadly, coming down a little bit lower. The line in the sand still remains put at about 170, the lows from about 2 Wednesdays ago. If you come down without setting new highs, that would effectively be a daily downtrend. You would challenge the short-term area of support. It's not a big one, but it's the closest one that we have, right? 170 down to about 165. You can see it kind of a little bit better on the weekly. The 12 EMA on the weekly is there too. But in the event that that's not enough, because it's not a big zone, right? It's clearly not as big as this one. So in the event that you unwind and act as if this level is not even there because of macro data or renewed sentiment, bearish sentiment from investors or whatnot, well, then just look at the monthly, right? The monthly is starting to show a little bit of a sign of a weakness with how it closed the month of August. If you pull back, kind of like Netflix, right? Whenever NVIDIA pulls back, has it ever been a bad buying opportunity when it pulls back close to the 12 EMA? No. As a matter of fact, they've all been very good buying opportunities in the last few years. So if I can see NVIDIA pull back down into the low 160s, that opens up the door, especially with some higher VIX, to sell some put options down here. Mid 150s to 150. That's where I want my positions. If it doesn't come down there, great. I get to collect the premium. If it does come down there, great. I get to collect the shares. It's pretty much win-win. So that's the area that I'll be focused on NVIDIA over the next 2-3 weeks as this price action evolves. If we just stay here range bound and kind of grow into the valuation, not too bad either, right? We'll just kind of set somewhat of a tightening range in the month of September. Maybe we end up with sideways monthly consolidation, at which point you can still play some short puts. But if I'm looking for short puts, under 160. We covered their earnings just last week, guys. Around 175, it's not terrible, okay? But if they drop 10% more and go to 160, you're going to be looking at a mid-30s price to earnings, about a 1.5, 1.55 peg, which is pretty good for NVIDIA. So that's why I would be a buyer into the mid 150s. Now moving into Tesla down 3.5% as well. Just cannot get it done on Tesla, sadly, right? Cannot get it done. Big rejection from resistance, 360 to 340. That's what I was kind of telling you guys, right? We did a good job of identifying the swing trade opportunity. We had a very nice tightening wedge right here. You broke out, you back tested, and now you ran into the take profit zone. Hopefully you guys were able to lock in some profits right there. And now we're kind of just in some weekly consolidation for this stock right now. So, you know, we kind of trapped here. And Tesla, in my opinion, in order to get the best value on this one, you really have to go with short-term patterns. And this was the last one it completed. Right now, there's really no swing trade for me that's active right now. If you move lower into the support area, talking about the low 300s, wouldn't it be a bad opportunity to maybe look for some swing trades at this point for some longs? What the bulls have to show to get me interested for a swing trade here, though, is not buying into resistance. No. You have to give me the breakout, the retest, and then on the retest, maybe I can take some swing trade longs, but we will take it 1 week at a time with Tesla. As of right now, no swing trades for me, clear rejection from resistance. So we'll see what the bulls can do in terms of playing defense over the course of this week. On to Palantir right now. Palantir bulls playing really good defense down here, guys. Really good. Like lower 150s, the bears are just not able to break it. Now, that being said, some people could argue that because this is a daily uptrend with an engulfing bearish move and consolidation towards the lows of the move, some people can argue that this is just a bear flag looking for possible downside. And that might be true, but that's probably only going to happen if you get overall market weakness. I really don't think that if the rest of the market performs well this week, the macro data comes out nice, I don't think Palantir is just going to find it itself on its own to drop another 10-15%, right? If the markets are red, though, then Palantir, of course, can drop a little bit more than other names because it has a higher beta. So please keep that in mind. The short-term support area is 148 down about 140. Not the strongest one, but once again, it's the closest one that we have. If you unwind a little bit more, the weekly higher lows are down here at 129. My favorite way of playing this one is on big red days, selling puts under the market. I'd be targeting the mid to low 120s. And don't say it's not possible. I literally did some the past 2 weeks in a row. We had big red days. You can say I did Palantir again. 130 short put this week, 62 cents to 23 cents. That was in one single day. Could have held it into the end of the week, but just watch out for those big red mornings on Palantir. You can probably get some fantastic strikes well below the market. That's the next support range, 128 down to 118, the big one at least, into the 200-day EMA. On the monthly timeframes, well, the Palantir chart not looking the best overall, right? Big move to the downside, still monthly overbought. If you do consolidate, it wouldn't look so awkward, right? Sending a monthly candle down here, September and early October. I know short-term Palantir shareholders don't want to hear that, but all you guys that are in this one, preaching about the long-term, preaching about the 5-10 years, you guys shouldn't care about this either, right? Arguably, it may just be a nice buying opportunity. So please keep that in mind with the monthly timeframes. Moving on to SOFI. SOFI, relatively not, red day on Friday, but not the worst. Still consolidating here at the $26 to $25 range. The daily bulls are looking to protect these higher lows, $24.91. Flush this, daily downtrend, and what are you doing? Just going for very healthy weekly consolidation. It's a beautiful weekly uptrend right now, as you can clearly see on this chart. Weekly uptrend, you'd just be looking for a weekly higher low, the good old breakout, retest, and the retest area is 24.26 down to 22. So if you pull back hard, maybe a nice opportunity to sell some puts below the market. The monthly timeframes also looking very strong for the bulls. Beautiful monthly timeframe of expansion. But keep in mind, guys, from the lows of April to where we are right now, this is a 3x in the stock price. If you consolidate in the month of September and October with the rest of the markets, it probably would be a nice buying opportunity, especially if you have a long-term time horizon on the stock. At 25, you're currently trading at a 1.61 peg, which is okay. You're trading at a 9 forward price to sales, which is also okay. As a result, any pullback, again, back into the lower 20s would make this valuation better and would give you better risk to reward as a longer term shareholder, targeting the expansion of the business over the next, call it 2, 3, 4, 5 years, yeah? On to Uber right now. Uber also, very awkward day for Uber on the Friday session. I mean, the price action on the daily is just very, very, very choppy recently on Uber. They had pretty good earnings. We covered them on the channel. It was a nice daily uptrend. Sadly, we unwound, came back, touched the lows, back testing support, 93.50, 90. If you don't understand what's going on the short-term daily, I wouldn't blame you. We're looking for the back test and possibly action to the upside. But as I said, this is all beholden to the market performance, guys. Uber's not going to do it on its own, and we're coming into some choppy seasonality. The one thing I can say for certain, though, is I'm probably not going for short-term swing trades here. It's just there's too much uncertainty on the horizon, too many volatility catalysts, which go over and above what Uber is doing on its own, right? Too many market volatility catalysts. That being said, if you do pull back down here, not a bad opportunity for selling some short puts into the high to mid 80s. On the monthly time frame, the bulls look very strong. And this is the clearest time frame in my opinion. Gorgeous monthly uptrend. If for some which reason you come back down here into the low 90s, mid 80s, and I can sell some puts here close to this support region, would this look so awkward? Just a back test down here and rally, coming back into big support and the 12 EMA? No, that's why I'll be doing it. And in the mid 80s, the valuation of the stock is actually quite nice, as opposed to at the higher end, close to $100. The bulls right now, though, holding on, but as I said, the price action of this one may be more dependent on overall market catalysts than its own catalysts, because we know their earnings were fantastic, right? But they've been struggling a little bit with the break above 100. Moving on to TSM right now. TSM down about 3.11%. I mean, TSM's price action has just been kind of wild. Just like the rest of semiconductors out there, it hasn't done anything since July. They had fantastic earnings. NVIDIA gave them a shout out as well on their earnings, and still it wasn't enough. The bulls tried here to get a very nice, 78, 80% retracement. They're trying to go for the uptrend change. We'll see if it actually happens. If we get more market weakness, line in the sand, 224, break this to the downside. Daily downtrend continues. Weekly consolidation continues as well, and monthly consolidation will continue too. The clearest timeframes for me on TSM are the weekly timeframes. There's a clear bearish lean right here. The weekly MACD looks like it wants to roll. The monthly timeframe as well. We can clearly see some monthly divergence on the stock as well. That is also an indication that you might have to roll over a bit before basing and finding the next leg of expansion. So you can see a common theme here, guys, is the markets, or a lot of these names, have very perfect chart setups for the monthly higher lows. As a result, right, we were looking for them in August. They didn't drop that much. Maybe September is the follow through. If September is the follow through and things start falling rapidly, you should be ready. Ready for what? Well, ready for TSM down here in the low 200s. If we come back down, low 200s, I'll be selling some puts down there and possibly going for some longer dated swing trade longs in relation to the 12 EMA, previous resistance, which is currently support. That is a very clear area. It'll just be very healthy weekly consolidation down into here, very healthy monthly consolidation with insane fundamentals, insane demand, and a very low forward price to earnings multiple. Those would be things that I like to call confluence, technical confluence and fundamental confluence, which gives me more conviction and more confidence for my possible buys. that is your entire market rundown. Hopefully you guys enjoyed that. Now, let's do some brief recaps here on some of the biggest gainers and losers of the day. Then I'll show you guys the portfolio. All right, so I'll go through these very quickly, guys. So bullish, if we're on SOXL first. SOXL for me, short put orders down here in the lower 20s. That will be a back test on the SOXX of the infamous support range. This guy right here, 235 down to 215. That is either the top 4 all the way down to 10. So you have to, forecast rather a 12 to roughly 25, 30% decline. So that first level that I'd be targeting for short puts, low 20s, and then the largest level would be around 18. Stagger the trades for short puts. Bullish, unfortunately, a very strong company, but very weak price action. If you get me back into the sub 50 range, you may find me selling short puts under the stock, as the valuation will make a bit more sense at that current stage, right? You'd be looking at further downside of roughly what? Another maybe, 20%, 17% type of thing, which would bring the valuation closer to maybe a $6.5 billion market cap, which is manageable. It'll be about like 10, 12, 13 forward price to sales. Manageable, a lot more manageable than it was at 120, that's for sure. Duolingo continuing its slide, definitely not favored recently because of the ChatGPT and obviously the AI headlines about translation services. This one is coming down into support. If we wanted to make an attempt for a swing trade right here, well, you'd have to wait for some of the smaller timeframes to kind of turn back over, namely the 4-hour time frame. You're looking for an uptrend here coming out of support. That could trigger some swing trade longs with the stop loss, trying to be below the daily lows here, trying to get an end to this bleeding and move a little bit higher overall. But we know the short-term bears are big time in control of this chart. So just don't be too greedy on the size, especially if you don't have confirmation on the lower time frames. Moving on to Ulta Beauty. Ulta Beauty is one that's very high for me, not close to any support levels overall. We know that Warren Buffett positioned on this one, I think it was like last year or something like that. Just take a look at the monthly though, right? The monthly is not close to anywhere, guys. If anything, we would be targeting a back test maybe of down here with the monthly EMAs, like 442, 440 type of thing. If Ulta Beauty comes back, then you'd be looking for a monthly higher low, maybe a better position. The one that I prefer though is kind of like e.l.f. Beauty. I'm going to play this beauty brand probably down lower into the low 100s to 90s if the markets do pull back, because we have had, very solid consolidation here for a better part of the last 2 months. If the market brings us lower again, I'll just keep playing my short puts down there on that one. BITX, 2x leverage Bitcoin. I'm targeting the lower 40 strikes. So that's just me trying to play the lower range of Bitcoin right here, talking about the lower $100,000 level on Bitcoin. So I am a big fan of playing BITX or just playing MSTR for a bit of an accumulation trade right here at these lows. I mean, you can try to sell short puts on MSTR if you want. 260 would probably be the level that you want because we're very close to the bottom end here. The last thing I'd want people to do is sell puts too close and then just get underwater really fast on this one. We know the MNAV is very cheap on MSTR right now. It's like a 1.55. Historical average is around 2. So MSTR is undervalued in 2 respects. Number 1, well, because Bitcoin's falling, but number 2, in relation to its own MNAV history. BYD is definitely a buy for me. I have this one in my long-term portfolio. Clinical breakout retest trade on the monthly, guys. This is what I'm looking for, right? Big prior resistance for how long? 4 years coming into support. This one is a long-term portfolio buy for me. I love what BYD is doing. They're really making leaps and strides into the European market, and it's a very wide business, right? They have an electronics component to their business. They also have the battery aspect of their business, of course. And then, of course, they have the cars, which are very cost efficient too. Oracle, I mean, they have earnings in a few weeks, but look at this monthly time frame, right? I'm not buying Oracle over here. It's way too extended, in my opinion. If we do come back down there under 200, maybe I'll revisit this one, but there's really nothing for me to do all the way up here on this trade. If you take a look at a few more, I guess, Oklo on the monthly timeframes. Monthly timeframes are kind of going to be the go-to timeframes for me into the month of September, because we know that it's not the best month, right? So a daily price action, I mean, the bulls are trying, right? Beautiful move here, trying their best to put in a lot of room here, a lot of space for the higher low, for the daily trend change, trying to put together a weekly leg of expansion, again, reacting from the casual level of support, which you've established since the month of June. The monthly time frame really seals it for me, though, guys. We're very extended. If we get a pullback on growth in the month of September, I would not be surprised if Oklo comes lower. Matter of fact, Last time I was interested in playing it was at these lows right there, which are just a few weeks ago, just 2 weeks ago. Get another big push down. Maybe you'll find me playing some short puts into the mid 50s. I can't really justify higher than that because they have no revenues. NBIS for me is a short put trade down here, 55 or under, just looking for a weekly back test of prior support, not looking too bad. And that would just be a nice leg of monthly consolidation, kind of like all the other names that we've been looking for. SMR, same concept. SMR is currently consolidating where OCLO is not. Down here, guys, 31 to about mid 20s is where I would not mind either accumulating, if these are the types of names that you like, or trying to sell some puts well under the market. This you got to be careful of, though. This is a weekly engulfing move. Okay, so be careful. We can head one level lower. Just when in doubt, zoom out. What are the monthly bulls trying to do? Just some very casual back tests down here. So mid 20s, not the worst opportunity in my opinion. There's so many names that were down. BMNR, I know you guys want me to speak about this one a lot because of the pullbacks in Ethereum. BMNR, I'm playing this one with short puts, guys. I'm playing this one semi aggressively. If you want to see, I do have one. I'll show you this one in just a few minutes as well when we go through the portfolio. I got a 39 strike, so I'm starting to play this one a little bit aggressively, but if you wanted to play it more conservatively, you'd be down here in the lower 30s. I mean, Tom Lee is doing a great job of getting a substantial amount of institutional investment into his fund. Now, arguably, the amount of Ethereum per market cap is exactly the same or close to the market cap of BMNR. So you're not really paying a premium on this one. And a lot of you guys like this one, and a lot of you guys like SBET, whichever one you like, right? Just play it slow, play it small, and only with money that you're willing to to give to this type of trade, right? CrowdStrike as well. I mean, we covered this one after earnings, great earnings, but looking for a monthly back test. Lower 400s, 400 down to about 370. Pull back there for a monthly in September. Clinical trade, guys, textbook, right? Breakout, retest. I know we had a nice engulfing move on the after earnings play, but then Friday kind of unwound this as we move into resistance, right? So that being said, if you unwind this, if the bulls are not able to get this trend change going, if they're not able to really move this weekly and you just move into further weekly downtrend, the biggest level, in my opinion, is down here. Low 400 would be a buy for me on CrowdStrike. HIMS remains additionally weak. Look at the monthly close on HIMS. Doesn't inspire the most amount of confidence, right? Which is why I still want to play HIMS mid to low 30s. Short puts. I'm not trying to take some longs from here. The bears are in short-term control. This is a bear flag. Big sweeping down move like this, right? Huge move. You see it best on the weekly, right? Big sweeping down move. Daily that looks like this. They had 2 weeks to get a bounce together, and they were only able to do this. Not able to get above the daily EMAs. Not looking the best, right? Focus on the monthlies. I'll be looking for a back test of maybe the mid to low 30s for any short puts. I think that's kind of it, right? I mean, we could go through we could go through 1,000 stocks. That's how many there is on. There's not that many on this list, but still a few more, guys. Symbiotic pullback down here, low 40s, high 30s, maybe for some short puts based on the monthly timeframes. Wouldn't be so awkward. If you take a look at maybe something like I don't know, where are the other ones on this list right here? Oscar, maybe, fan favorite, right? Oscar, clear support range down here, guys. So clear, right? Talking about 15 down to about 12.5. I play this one almost every single week when I can. 15 down to about 13, selling some put options there. Sure, I mean, yeah, head and shoulders, but where's it going to take you down into? Well, maybe the exact same location that we were just in right now. That'll be a reload area for some longs, any leap call options if you really want to play this name with a bit of risk. And also some short puts if you're just looking to accumulate some shares. Those are the major ones that went down. I mean, you guess you could look at Micron. Micron, same thing, retest 110 on a 100. I'd be a big fan of playing some short puts, just healthy monthly consolidation into a very clear resistance support area for your longs. They had fantastic earnings. The valuation at 110 is extremely attractive. Big fan of accumulating down there. And I mean, to the upside, you have a bunch of names that we already talked about. We already talked about IREN when we went through their earnings. We already talked about Baba. We already talked about Affirm the other day as well. If Affirm pulls back a little bit more, back into maybe like I mean, I know it's really high after earnings right now, but if it pulls a Meta and just gives everything back after earnings, if I can find Affirm back again, back into like under 80 down to about $70, these guys, right? Just monthly higher lows for possible expansion. Maybe I'll just reload some Affirm longs as they did close some extremely juicy profits on the Friday session, which I'll show you in just a few short moments. Sentinel-1, we also covered them after their earnings the other day. There should be no surprise here. We covered them on Thursday. That being said, Sentinel-1 accumulation zone back to 17 to 14, short puts all day and even leap call options to maintain for expansion of fundamentals over the next year. not a bad opportunity, as we did cover them after earnings. I think there's some good risk to reward here on this trade in terms of logical base and bull case expansion of their multiples that you can see right down here. I know I'm going through these fast, but it's because a lot of these, we've already seen them, right? I mean, UNH, very solid monthly candle close, engulfing move on the monthly, creating a very nice demand zone down here. So the monthly RSI and the monthly MACD probably will have peaked, but this one is a longer duration recovery story. Nice little engulfing move here, using the whole 300 down to 275 as a support. So building some more shares for long term, not too bad. The company's still cheap. You guys also have Warren Buffett behind you now too. So not bad, but it is going to be a slow mover, right? You're not expecting a Palantir style recovery. And I think that's pretty much it, guys. I mean, some of the credit card companies, American Express, fantastic move. A bit tough to get in now, but back here I was kind of screaming at everybody, look at American Express. It was beautiful. The monthly breakout, monthly retest of the 12 EMA, it was beautiful. We play this one a lot in our Discord, and everybody's up a substantial amount of money right now, so looking very good there. And I think that's it. I mean, maybe just FICO. We highlighted FICO about a week ago at this time, saying it could be one of the best beneficiaries for the rate cut themes, because obviously credit scores will be needed to be ran more by these companies. Nice daily uptrend expansion. I mean, you're still low. You might think you missed the bottom, but I mean, hey, who's playing call options here? Probably no one, because they're like 20 grand a pop. But if you're accumulating shares for a long term, I don't think you're late at all. I mean, look at this quarterly candle pattern right here, right? Beautiful retest of the 12 EMA quarterly chart. This almost never happens, right? Beautiful location, accumulation down here towards the lows, still very decent for a long-term trade. And I think, honestly, that's it. I mean, special shout out to some of the consumer defensive names that could be very advantageous in the event that there's a rotation out of tech into everything else. Walmart, mid to low 90s. We covered them after earnings. Decent area. The bulls have been holding this for a while. I mean, you can look at other value names that have very nice technical setups, such as like a Colgate Palmolive. This one too, right? Looks bad on the monthly downtrend, but into where? 2021 highs. Zoom out one time frame more. It's literally just a quarterly breakout retest, right? Not looking too bad. I mean, they've held these for a while. Some other names as well that I can just think of off the top of my head. Equifax, we can look at too. Equifax, very nice basing out right here. Not too bad. 240, then about 216. So there's a lot of names in like the value categories in or around great support levels that could represent a decent little upside swing in the event you were looking to broaden your horizons to the more defensive sectors of the market, right? Waste management, solid area of support right here, 226 down to 220. Fantastic company. This one definitely, I mean, looking great. Every time it comes down to the 12 EMA, decent little buying opportunity. Couple that with support, very strong, looking pretty good for possible upside trend continuation right here. So not looking too bad, guys. I mean, that's pretty much everything I had for you guys today. We went over a ton of stocks. Hopefully you guys enjoyed those. Now let's have a brief look at my portfolio, because the video is already an hour and a half long. I know it's a long weekend, but maybe 5-6 minutes. We'll do the portfolio recap real quick. Okay, so the portfolio trade recaps real quick. Well, they're going to look something like this. So we had some very nice wheel trades, all of which were highlighted on last week's top 5 options plays. USAR, BITX, NVIDIA, Walmart, and BNMR. NVIDIA was kind of a trade that we took after their earnings. We were able to get out in one single day, which is why you're seeing me close these profits early. When I can get out in one single day, that was from the Wednesday or Thursday session intraday. It's a good thing that I was able to close these, because thereafter, guys, they kind of fell off. As a matter of fact, so not too bad, right? NVIDIA ending the week just close to 174. Actually, these puts were, I don't have the correct date here. These are actually for next week. So I was able to get out of these in a fairly rapid manner. Very decent. Walmart 95. We literally just highlighted that trade on Walmart. I wound it down to play NVIDIA earnings a bit early. It was coming into our strike, but never really got there. Walmart still a play, 95 to 94 short puts in my humble opinion. And then one very casual BMNR trade, which we made 90% profit on. Very solid, right? So all these trades will be recurring themes over the next maybe week or so. Sentinel 1, we got called away at 17.5, our initial entry strike. During the last 4 weeks, we were able to accumulate some pretty decent profits. I'll show you guys how that one went. These were a few covered calls that we got into earnings. We got called away, and over the 4 weeks, we made 1.6% per week. You guys know my wheel trade rules. If you can make 0.5% per week, that is your target minimum. So we came in above that, very decent. CoreWeave, you can see that we got assigned at 101. We've been writing covered calls a couple times this week, once early on in the week, and then once after NVIDIA earnings, when the stock actually popped up very nicely. So total credits now on CoreWeave as we currently stand. We're currently standing at an average cost of about $96.12. The stock is above that now. We have covered calls through September the 12th, so we will see how much further we can actually wheel this one. But we have some decent accumulated, credits, and which brought our average cost down a decent margin from 101. So we are safe for now. The stock's trading around 103. We had some very nice directional trades as well. The Affirm calls. Affirm, we bought these calls. I showed them on the channel, guys. We bought them after last quarter's earnings, like here, okay? At 50, it hit our price target close to 100. I was able to wind that one down very early on the Friday session. Very strong gains on that Affirm option. 3.4x, 238% ROI. These one were $110 calls for January of 2027. But when you get that fast of a rally and the blow off top after earnings, I always usually take some profits. I can get back into this trade as I still love this trade, but profit is profit, especially leading into the month of September, which could be a little bit choppy. We also closed a Berkshire call debit spread, 505 to 510, because they came into our lower end of our strike. You can see right here, we took this trade somewhere back here, I believe, in the month of July. It ran against us for a long time and finally coming into the profit target territory. So not too bad there. Small trade. I mean, depending on the size of your account, you either have 1, 2, 3, 4, 5 contracts. Not too bad here. Made about 30% per contract, which is very good. Then we had some lottery trades, the Palantir intraday one, off of a big drop. We closed that one in the middle of the day, rotated the capital to other plays. Open door, I mean, we had a small little open door contract, 3.5 short puts here for about 10 cents. Those expired worthless. And an NVDL as well into earnings for NVIDIA. NVDL 68 puts for 35 cents. Close them for 3 cents. A nice earnings trade that went well for us. NVDL will be another opportunity down here into the 70s. That will be a back test for NVIDIA, the big NVIDIA, 155, 150. So what trades did I take on Friday into next week? I will show you these trades right now. So the new trades, we have some BITX 45 short puts, which is like Bitcoin lower 100,000s, BMNR 39s. So I'm playing these ones a bit aggressively. We got 50 cents for those. Very aggressive, but I did tell my chat, you guys can play the lower 30s if you want for 0.5%. I'll play it a bit more aggressively, possibly, forcefully assign myself and then just run the wheel on them. CoreWeave, we talked about it. We have the covered calls. MSTX, this is another play that I'm doing on Bitcoin using the 2x leverage version of MSTR. It is an aggressive strike, a very aggressive strike. There were strikes far below this, paying 0.5%. I went for the big one, 21.5 short puts for about 40 cents. We will see how that trade lines up. If I get assigned on BITX, BNMR, and MSTX, I'm a big fan of doing that, guys. That's an ETH pullback, a Bitcoin pullback. I will hold these and farm some covered calls against them. I have a new NVDL trade for September 5th, this Friday, 73 short puts for 42 cents. Not too bad. That ensures that I have a decent amount of distance between now. These are all on Friday, by the way. These are all taken on Friday on the sell-off. I have an additional distance of about 12.5%, right? Almost 13%. That will be an additional sell-off on NVIDIA this week of 6.5%. I would be willing to play that pullback. 6.5% on NVIDIA would put me, right, roughly about, let's call it 162. So I'll be trying to play this whole zone, 160 down to 150 on NVIDIA. I'm willing to go up to a few more contracts and play them in a staggered fashion. We still have an open door covered call. Our average cost on this remaining batch of 100 open door shares is pretty low, guys, right? We got called away on 100. My new average cost on the remaining open door shares is $1.72 per share. So I'm just farming some covered calls on this one. I'll just play it either way. Oscar Health is another short put trade, 15.5s. Support area that I was telling you guys about, right? Leading into the end of today's video, right? 15.5, 15, 14, that whole area. I wouldn't mind doing one or several contracts, just one for now, as a matter of fact. And otherwise, we have the SOFI 23.5 puts, playing one contract there, another contract low 20s, and another one under 20 if we get down there. But SOFI, we're currently up a little bit, over 50% on this contract. We'll see how it goes, but this SOFI trade, very simple, right? I'm playing the first level touch back into support, breakout retest. We'll see if it pulls back all the way more. I'll do another one, and then I'll do another one, and then I'll kind of just carry the SOFI shares into the next leg of monthly expansion, depending how long that takes. I'm willing to play it that way in the portfolio. And then we have an SOXL. As I said, low 20s first entry, and then probably under 20, like 18 would be in second entry for SOXL. This one too, all of these trades were open on Friday. I still have a lot of buying power. These are very small trades, but those are the trades that I took on Friday. Everything else remains the same. We still have the all the other call options except for Affirm, the KWeb, $40 calls. They're doing well right now. The Oscar leaps, those are doing okay. The Sentinel-1 leaps after earnings are up 40%. The TLTs are still down. The XLVs are still higher. So we got some nice little plays here, some healthcare plays, China exposure as well. And then on the combo trades, the call debit spreads, the only short ones that I have remaining are Airbnb, which is up 30% right now. Adobe is still dead. ASML is still largely dead as well. CRM is still dead. I took a new trade on CoreWeave. These are leaps. 135 versus 280. Bull call debit spread. This one cost $1,930. What's the profit on that one, you might ask? It's a very good risk reward, guys. 280 minus 135. Total profit of 145 minus my cost, which is 19.3. Total actual profit minus cost, $12,500, possibly. What's the risk to reward on that? I'm glad you asked. It's a 6.51. Decent risk to reward from these lows. December 2027 for that to play out. We still have the Amazons, which are up 42%. We still have the Google leaps, which are up 80%. We still have the Micron leaps, which are up 137%. Very solid. The PayPal small ones are break even. The NVIDIA earnings trade, which was just an earnings gamble, that one is down 25%. We have until November for this one. Meta, almost hitting my stop loss right now. If it breaks 735, 730 to the downside, I will have to take this one off as a stop loss trade. And the other ones we've already been over so far. So that is the markup of the portfolio. We were not down $433 on Friday. We were actually up $530, $600 on the Friday session, which is like 1.5% for this portfolio. So the Interactive Brokers weekend calculations, once again, not playing out the best because it just takes the bid for all of these options, right? And the spread is very wide. That's why it always shows losses on the weekend, even though Friday was a good day for us. That's all the trades that I have for you guys today. Hopefully you guys enjoyed, and that's the entire video. If you liked, consider liking the video, consider subscribing to the video as well. If you're new as well, consider leaving a comment down below. I'm always there to help you out. In the event you wanted to join our Discord and get all of these trades in real time, the trades, the live streams, chat with me in real time as well. Live streams every day, our educational section about technical analysis, fundamentals, trading strategies, option strategies, and copy paste all my charts and all my watch lists. All that comes included in the Discord. Feel free to use the code for Labor Day, capital letters down below the video description. Labor Day in all caps for 30% off your first month. That's all I had for you guys today. Take care and peace.